Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 20th, 2019. As always, please hit the like button, subscribe to this channel, and share this video with others. Again, stocks are breaking two new records, new all-time highs. Offensive sectors such as discretionary and technology and semiconductors are leading the market higher. We will look at European equities, one of them at least, Switzerland, and I actually have a trade open in Switzerland, EWL, up over 18%. We'll again revisit Apple trade, it's just one of those home run trades, up 41% already. Junk debt hits 52-week highs. This is good news for stocks. Treasury still looks somewhat weak. Natural gas looks a little bit promising, and I'll explain why. Gold and dollar, the the relationship is still, or rather, gold is feeling this all of a sudden new strength in the dollar because euro and USD JPY uh, are actually moving against, or rather, dollar is gaining versus those currencies. And Bitcoin completes the target, and we'll look at Litecoin and Ethereum as well. All right, so S&P 500 once again at record highs, amazing move, breakout, from record. Two new records occurred right there on 28th of October, and it just kept going. As I kept saying, new highs usually produce more and more new highs, so we're basically trailing our stops higher. And here's, for example, one. I keep showing the same trade, but it just keeps going. QQQ, Nasdaq 100 ETF up over 21%. Again, congratulations to subscribers. Alert was sent here in June of this year, so you can see those are sizable trade in terms of time. But as I keep saying, stocks usually it's better to hold them longer than to trade them, in and out of them. The longer you hold, usually the better the gains. Same goes for Dow Jones. Alert was sent back in May of this year. And there's the opportunity, or rather, that was the opportunity, the only one that I saw. Uh, I always basically doing the same thing. I'm waiting for the stock price to come down towards the blue indicator line. What is this blue indicator line? The green indicator line, the red and the yellow ones. These are four lines that I programmed in myself, and you can see this is MasterCharts Trading Price Action Indicators. I can turn them off. You can see it's much more difficult to read the chart, but if I turn them back on, you can see it's really clear, it's really obvious, and this is where we buy. We buy on pullback or on breakout above the blue line. And I'll show a breakout trade possibly later on. But this is a pullback type trade where a stock is already above the blue line, it pulls back towards the blue line, and then we buy it there. So once again, you can have the same indicator lines on your chart. All you need to do is open a free TradingView account, tradingview.com. This is the interface where I'm hovering. Open a free account, then open an account here at MasterCharts Trading, sign up for one of the paid plans, and you can still get a 30-day free trial. So trading indicators, alerts and indicators, you can still get the trial to try out the indicators. IWM finally breaking to new 52-week highs at the very least. This is again very good news. Here are the several alerts for this security. There's latest one was September 11th. Very nice move. Again, we held through this drawdown because our stop would have been at the yellow line. XLY, this is consumer discretionary. This is a type of stock, once again at record highs. This is a type of ETF that investors buy when they are pretty certain that the future looks pretty good. This is offensive sector. And offensive sectors benefit during times of economic expansion. So, for example, right now, So XLY has various consumer discretionary firms, such as Disney, for example, and they are performing well when people have money, discretionary money to spend. And you can see these are fresh record highs. So again, usually I try to tell my clients, my subscribers at MasterCharts Trading, to as much as possible avoid listening to the news and concentrate on the chart. If the chart is telling you to go ahead and buy, for example, right there in June of this year, then we went ahead and bought. If the price is telling you to do nothing, then we should do nothing. So this particular trade is up over 13%. Same goes for XLK. Very nice move again. These are all-time record highs. Uh, this is also a very much an offensive sector, up 24% since the latest alert in June of this year. Again, congratulations. Not much I can say. Just don't listen to the news. Look at the chart and have a system. And I have a system for you. All you have to do is sign up. It's not expensive. Here's one very nice nice record actually. Another very nice trade. Again, this is XSD Semiconductors ETF, a high beta sector, or in this case, industry group. Uh, this is not the type of stock that people buy during the times of uncertainty. There is plenty of certainty out there. And for example, the latest alert again was in June of this year, up over 31%. Again, congratulations. And once again, notice the longer you hold, the more the gains. So it makes more sense to hold. And I've been doing basically trying to do the same thing. I mean, of course, I occasionally, take profits, and usually it actually makes more sense to hold through the drawdowns and just keep holding them during the bull market. So here's one position that I actually have still open. I bought myself in February of last year. So, or I'm sorry, February of this year. So it's coming up on a year soon. This is Switzerland, and notice I sold a half of my position here in May, and now it's like, why did I do that? And notice that it's at almost 18, almost 19% up now since the entry. So even though I sold half, I still have half my position up significantly. But as I keep saying, uh, it makes more sense to hold during the bull market. And this is a type of breakout trade, by the way. So you can see the price was well below the yellow line, came up above the red, and then finally broke out above the blue. So it's breakout trade. Again, you can find out more about this at MasterCharts Trading. I have a blog and the indicators as well for you. Apple. So let's revisit the trade for Apple. Latest alert again. Um, well, actually, all these five alerts, I would have held through them through this drawdown. For example, the one that stopped around the May 30th. Because my stop would have been at the yellow line. So even you can just say that you bought, I don't know, let's say, a latest alert here on the 7th of August, and it just took off, and it's still going. Look at this brand new record highs, 41% up since entry. Super easy, no brainer. You take my word. I used to make trading so complicated, and I used to just overthink stuff. I still occasionally overthink, but um, ever since I started using my own indicators, basically I had nothing but profitable month after month after month. Uh, I have over 200 trades or so that I have documented, and overall I have close to 80% success rate. So don't overthink. Just buy on close above the blue line and just hold it, and you will be rewarded usually. in 74 to 80% of the cases. Excuse me. Here's another trade, junk bonds. Junk bonds and stocks correlate highly to one another. So you can see that junk bonds right here broke out in January of this year. S&P 500 broke out in February of this year, but very close to one another. So overall, they correlate highly. So in other words, they move together lockstep. Excuse me. And this is an actual alert. Yeah, same thing. We bought 30th of January here, just hold through it, and new 52-week highs. So congratulations to subscribers once again. So treasuries had obviously a huge move recently and up to 24%. In fact, I actually traded this one. Uh, Question is now, is this huge move about to be completely undone? This is entirely possible, and we can see kind of like a breakdown below the support resistance line, uh, potentially approaching, we're going to see potentially a breakdown towards the red line. Uh, at which point I would say that TLT, the treasuries, are in the bear market. So, uh, can this happen? Sure. We'll see if Federal Reserve does something again. But as of right now, the way I'm reading this chart, there is a little bit of a warning situation going on with TLT treasuries. Right, let's switch gears and let's look at various commodities and continuously traded instruments. So here on this chart, we can see natural gas futures, and notice that, not that far back, even in November of this year, the distance between yellow and green line was huge. It was like $1.928. Notice what's happening right now. I can see the distance between these two lines is only $1.1. So it almost halved. So what does this mean? This means that there is a narrowing of a trading range. Um, if or when the price comes up towards the blue line, and if or when it closes above the blue line, we will say that the natural gas is in a bull market. Right this instant, it's still in the bear market, but uh, the bulls have something hopeful to look forward to, because again, when the indicators are narrowing like this, the price has less distance to travel towards bullish levels. Here it was a huge distance, almost $2, but here it's only $1, so there's even less. So it could more easily get there. Uh, Again, it's not yet in a bull phase. It's definitely bearish. So we'll see if when the price, or if the price even gets to the red line, if it gets shorted there, then that means that the breakout is obviously not happening. But right this instant, it's possible. Maybe natural gas is turning around. It's possible. Gold basically been trading sideways since like November. Narrowing of a trading range. I don't really like this chart that much anymore. Uh, and the reason being is because price has again less distance to travel towards the bearish levels in this case, because you can see the narrowing of a trading range versus what used to happen here back in, for example, September, and just not really any kind of breakout. So I am expecting a largish move, and it could very easily be to the downside. So let's be more careful with gold right now. And dollar, the way it's been acting, has been somewhat erratic as well. The relationship between dollar and gold usually is negative, inverse, but not of late. Additionally, we have a here's the dollar. You can see on the 12th of December right there. I'm gonna zoom in where I'm hovering right there. You can see a breakdown below the red line. So this means a trend change to the downside. But notice almost immediately it went back. So I'm not yet convinced that this is indeed a trend change. In fact, here's euro versus US dollar. I'm not trading it on the downside right now, but sometimes I wish I did. Again, perhaps I'm overthinking this whole thing with the dollar index. But notice it's not yet reversed. It's still in favor of US dollar. So euro versus US dollar still in favor of US dollar. I would be shorting this currency pair. Where I would be shorting it? Around the red line. So you can see this purple downward facing arrows. These are not the actual alerts uh, because I keep thinking the dollar will go higher. So I keep avoiding shorting this one. And all of a sudden now USD versus JPY, Japanese yen, uh, USD is gaining versus Japanese yen. And in fact, here's the breakout. I mean, I'm not trading it again, but now I'm considering, all of a sudden Japanese yen is turning around. Uh, Perhaps dollar will continue higher after all. This should weigh on gold if it continues higher. All right, finally, Bitcoin. This is again an actual alert right there on the 4th of December. This is a short alert, in other words, to the downside. I would have been shorting this currency pair BTC USD. And notice it's more than reached its target, so it's a 9.5% drop in our favor. Depending on where you entered, you may or may not be already out of this trade. But in either case, this was definitely a successful trade. Additionally, I wanted to point out, for example, here's Litecoin, and very interesting. This arrow where I'm hovering right now on 17th of October, I put it there then on 17th of October. I said this is the move from the 20th of September to the downside, and I think there will be more of the same duplicated to the downside, around another 35%. And lo and behold, right there in December, that's another 35% down. So overall, very nice move if you held through this minor drawdown. So this is a huge move in your favor. Ethereum, basically the same thing. Notice the downward arrow, and I would have been shorting it on the 24th of September, right around $200, moved 20% immediately, and then another 20 some percent down. There's the recent lows. So maybe it will bounce a little bit, but this is definitely a bearish security. All right, so that's it for this week's recap. Um, Once again, as I keep saying at the end of each video, head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word. Then click on sign up and sign up for one of the services. If you want just the alerts, you can also, we can call it newsletter. If you want the newsletter, you will receive uh, many different alerts about many different securities. For example, Apple. This is again several actual alerts that were sent in the newsletter to my subscribers at MasterCharts Trading. So those are the alerts, and we trade all kinds of things like ETFs, small caps, large caps, gold related, speculative stocks, Bitcoin, everything. So you can pretty much trade, pick and choose whichever one you like. Again, free 30-day trial with all of my services. So if you don't like, you can cancel at any time. If you want the trading indicators and you know what you're doing, uh, you can get the same indicators, this green, blue, red, and yellow line on your chart. All you have to do is just sign up here at MasterCharts Trading at $29.95, or you can get it yearly, and I'll open the door for you on TradingView. Right this instant, they are still available for TradingView, but we are in the works of converting them. Excuse me, to MetaTrader, NinjaTrader, etc. It will take time, but eventually we'll get there. So stand by. But for all practical, you don't really need it. You can just get a free TradingView account and trade on TradingView and trade, rather graph on TradingView and then trade wherever you're trading. All you need to do is know the numbers, where to buy, where to sell. And of course, you can do the same both full package as alerts and indicators, I think it's the best deal and also the most value, because in addition to the actual indicators, you get tons of examples. Every day I send a video, I send a recap of what's happening in the stock markets and the markets, and you get all of that together with the indicators, so you can have very good decisions, make good decisions. Right, this instant is still on sale, so do sign up. Okay, that's it for this week's recap. Thanks for watching. Have another great trading week. Bye bye.